Welcome to Forex Films. Today is Wednesday, July 6th, 2011, and we have several interesting developments today. Pretty much every currency pair has moved the way I expected to this week, except for the Euro US dollar, which has made a notable retracement or move to the downside. As we can see here, this is a daily candle chart of the Euro US dollar. You can see I moved down in May, followed by a move higher, move lower, move higher, and we're on our way back down. And something I noted in my last video and other people have noted around trading forums is the possibility of a triangle here. And I think since we broke below 1.44, this really comes into play. And when you start a line up here at the top of the May high and bring it down to this next low, it actually crosses below this high here. But that isn't a true resistance line for a triangle anyway, because this is the origin of the triangle but not a terminal point for any wave. It's not as important as a terminal point of wave A, terminal point of wave B, wave C, wave D, and so on. So we have a lot of different ways that this could play out. I'm still optimistic about the upside of this pair. I haven't been trading this pair actually. Luckily, I've been trading others like the pound dollar and Australian dollar, which have not had the downward momentum that this has had. So what we can see here is this could be a series of ones and twos, but I find that very unlikely. What is most likely to be the result of this is a triangle, and because of where it lies in the pattern, it's probably a wave B between two large complex corrections. So we have A, B, C, D of the triangle. So where can we target with E before upside resumption? The very obvious point here is 140, 150, 140, 160 at the bottom of the converging pattern here. But that doesn't necessarily have to be the case. We don't need to touch that at all. We could move back up from where we're sitting right now, or move slightly lower. Say we've got support here, 42.80, which we've actually already hit, but we could come back down there again and see more upside from that, or 42.50, because the E wave of triangle is something more complicated to predict the end of. Sometimes it ends around the middle, sometimes it comes down, sometimes it breaks a little bit out to the downside with a false break before a move that's very quick to the upside. So I'm just thinking, if you're going to trade Euro US dollar, be very cautious. We have ECB Rate Decision tomorrow. Very, very important news event for this pair. And we have US non-farm payrolls on Friday. So basically should wait for ECB Rate Decision to trade this. There's much lower risk pairs that you could get in on right now and have a much better time with than risking more money here. So let's look at a few more of those pairs. we have dollar yen, which still hasn't broken up, but it is still forming that base and is still more likely to go up than it is to go down. So I continue to look to the upside, remote possibility that we will head down from here, but I really don't see that happening. Pound dollar, which I've been trading, and we're still sitting around here 160. This still looks bullish. I still remain confident. I think this low is going to hold. We have Bank of England interest rate decision in the morning also, along with ECB, and I really think this is going to go higher. And if it breaks that low, I'm definitely going to short it if it's a confident move, because we have excellent downside potential all the way to 1.55 if this three-wave corrective pattern is broken. And the dollar Swiss daily chart also. We have long-term resistance coming down here. And as I expected, this did not make any new highs. We can actually see that it's moved pretty well to the downside, and we could definitely see more continuation. The only thing I advise caution on here is people might want to speculate about a potential head and shoulders formation happening. Still, I think we've got, even if that did happen, we've got more downside coming in a few days before we could really see any gains come out of this, and so I think you've got a better chance of making money on continuation to the downside on this pair. Aussie, and we have 4-hour candles here. As you can see, it's done very well at holding its high, basically consolidation, not much retracement, which this is exactly what you would expect if it's a B wave or X wave between a ABC or WXY pattern to finally get us to the top for the major true reversal. All these bullish setups, US dollar bearish setups, are what makes me still feel like the euro is going higher, but I see more potential with these other trades. I think the euro will move up possibly very quickly, but it has more risk in the trade, which is why I want to trade these others instead. Two more. Dollar CAD. We did have that break and quick retracement. I think we're probably headed down from here. There's not really much more reason to go to the top. No fundamental events that are really going to move this until Friday, but it'll probably just move with the US dollar. And I didn't mention on the Australian US dollar, we have Reserve Bank of Australia rate decision tonight, Thursday morning for Asia. And last and possibly least, New Zealand dollar, US dollar. And this is the exact same story as on Australian dollar. We've had consolidation, we've maintained bullishness, and I really think we're just going to move higher after this consolidation finishes. We could see a drop back to 82, but I think it's more likely we'll see a movement to the upside after this event risk comes out. And this is really more terminal than I believe the Australian US dollar pattern is. I think we're already in our final leg here. We get 1, 2, 3, 4, and 5 may take us to 85 or just short in that area somewhere. And that's all the things I'm looking at right now. Good luck trading. Please give me any comments or questions on the contact form on the website. I appreciate you watching, and good luck trading.